Okay, recording this video after close of trade Tuesday, 21st September 2010, FOMC meeting today. Still not got the distribution of these video timing right yet. I know the email subscribers haven't received Monday's video yet. And I'm also trying to get these done in 3 minutes, so let me crack on. First of all, today's activity, we kind of closed lower than Monday's activity. A lot of very quiet during the morning as expected, and then huge volatility in the afternoon and a reversal kind of afternoon. 1.8 million contracts traded. I'm becoming a little bit more agnostic now in terms of direction. Let me show you what I'm seeing on some of my charts. First of all, a couple of weeks, over the last couple of weeks I've talked about the interest rates here, and they're really starting to play out, particularly with yesterday's announcement from the Fed. Here's the 5-year chart, and you can see that we had a pullback and a downtrend, a cyclical turning point at this point here, and rates are really starting to move to the downside here, and we're looking like we're going to be breaking to new lows shortly. TY, this is the 30-year. We had our turning point a couple of days ago, and they're starting to move down here, and similarly on the TN. So after yesterday's activity, we got our cyclical turning point, little white dot there kind of turned. So all of this means rates are going down, therefore bonds are going up. So just show you the bond chart quickly. This is 30-year bond contract. Talked about this a few days ago. We had our sell-off in terms of exhaustion volume down here, and then we made this beautiful kind of double bottom pattern here with amateur yellow, amateur down bars, Rambo patterns, this double bottom here, less and less selling activity, flush signals and so on, and we've started to really kind of crack to the upside here. So the bonds are starting to take off. Less clear in terms of other markets. This is copper. Yesterday I was talking about copper starting to really make a downtrend. We'd had our exhaustion buying at this point, a Rambo pattern started to move down. However, after Tuesday's trade, we saw a lot of professional activity come in below this cyclical support level here, bullish divergence, and we've closed above that cyclical support level here. So starting to see a little bit of strength coming back into copper. Euro, I thought Euro was dead at 131 and starting to roll over with very weak selling at this weak buying at this point here, but cracked on through 131. We're back up at 133, so we're back into another uptrend. Yes, weaker buying at this point here, but still that's kind of pointing the bullish kind of case. And then crude oil, talked about this yesterday. We'd had a pullback and a downtrend. And then on Tuesday's activity, we had all of these professional blue bars come in, an end of trend warning signal, bullish divergence, so on. And we've started to find some support here at 75. So again, adding to the kind of the bullish case. And E-minis. So here on the E-mini, this is Monday's activity. We had all of these professional blue bars, stopping volume patterns, and professional taking out. Talking about the 1140 level was kind of a key level to start to take profits. And yes, we cracked on through 40 and went up to 44 after the announcement today. But it was bearish divergence signal here, stopping volume pattern, and we're coming back down to this cyclical support level here. So if we broke below that, we'll see some weakness into today. But I'm becoming less and less kind of bearish, just because seeing some support coming back in. The euro strong, crude strong, copper strong, and so on. So I'm just a little bit more agnostic. I'll be taking my trades in both directions today. In terms of day trades during Tuesday's activity with the Fed, I was playing the short side most of the day. Missed all of this rally here, but had a small short trade in the morning and a good short trade in the afternoon. I was playing off this cyclical support level here and all these professional blue bars. And then here was all the FOMC announcements. Huge volatility to start there. Very difficult to trade that kind of activity, so I just stand back. And the entry short for me came up on the 1500 tip bar chart with an end of trend warning signal here after the announcement. We had all these bullish professional up bars that was signaling profit taking at these highs, exhaustion volume here, bearish divergence, all these distribution patterns here, and that was a nice kind of trade short at that point. And then today in the aftermarket, we've kind of cracked back down to 1130. So it's looking weak in the aftermarket, but I'll just have to see and wait and see how my trade's set up. So hope your Emini trading is going well.